Hey guys, I have some breaking news. Remember Tai Lopez and Alex Mer, who started a company a few years ago called REV, Retail E-commerce Ventures, and they were buying all these companies that went bankrupt, like Radio Shacks and Pier 1, just to get them from a brick and mortar into an e-commerce business, thinking that they have all this massive consumer database that they can leverage and sell some stuff online and get that started. So they were the owners of Radio Shack and Pier 1, and they were just recently accused by the SEC of operating a $112 million Ponzi scheme. So this was the New York Post article here. So a pair of flashy e-commerce entrepreneurs who bought bankrupt retail giants like Pier 1, Radio Shack, also models sporting good. They were accused of running this Ponzi scheme. So here's a picture of them in their executive jet. And then they were snatching up like struggling brick and mortar brands, attempting to rebrand them as online only shops. And I think that I kind of like the idea initially, but I guess it comes down to operation, and sometimes good ideas don't always happen. So they talk about Mer, an Iranian-born immigrant who worked in risk and safety management at NASA. Lopez is also a social media influencer who has been written several self-help books, including his 67 Steps on How to Become Wealthy, that incorporate teachings of powerful and famous people. In one of their high-profile deals, REV, so this is their company, acquired Radio Shack in 2020. And I thought honestly that was a great idea. They paid a lot of money for that. The idea, the concept, I thought was good. The question is, how do you execute on that? They also picked up models, assets, and peer imports, and then allegedly made material misrepresentation. And this is where they get in trouble. I mean, you can have a good idea as a business person, and you could fail in the operation sometimes. Sometimes it's a little tricky. Sometimes you make mistakes. I'm not a fan of Tai Lopez, by the way. I mean, he has some different ideas about the world than I do. But still, I mean, he was trying to do something. I thought it was a good idea. But here's the issue. He says that this pair made material misrepresentation to hundreds of investors about the brand's performance between 2020 and 2022, including claims that the companies were on fire. Right? And then that's what the SEC was saying. And then, the investors, no, they were there, part of the meetings where they were reviewing results and stuff like that. If you're an entrepreneur, make sure that you don't make misrepresentation. You are representing your investors, and you want to make sure that, they trust you. I mean, as much as you can trust someone like Tai Lopez. So contrary to these representation, while some of the REV retailer brands generated revenue, right? None generated any profits. But consequently, they had to pay like millions of dollars in interest payment and dividends for different notes. The defendants resorted to using a combination of loans from outside lenders, merchant cash advances, money raised from new and existing investors, transfer between portfolio account, so basically every investment was a separate LLC, and then transferred between companies in order to cover these obligations. So all these things, first of all, misrepresentation, and then mishandling the cash and how you're paying for these loans, and then maybe not talking about them. So this is where the problems started for them. You have to be very careful when you are an investor and then you are handling investors' fund. You have a fiduciary responsibility. Everybody understands that there's risk, and then sometimes things don't make money, but you have to be open and honest about what's going on to your investors. So here's the SEC filing. So the SEC charges co-founders and COO of Florida holding company of misappropriating investors' money and operating a Ponzi scheme. And the Ponzi scheme is because you're taking new investors' money to pay old investors' money. You're just raising money just to pay the interest. But the really key component here is that they're misrepresenting what is going on with the company. It would have been a different story if they would have said, hey, we don't have any money, we need to raise money to pay for these loans or pay them off or renegotiating them. So REV's primary business was purchasing distressed retail companies with name brand recognition and converting them into e-commerce only businesses and serving as the holding company and manager of the REV retailer brands. So each brand would kind of like stay the same. REV was at the top, being the manager for that. So that makes perfect sense. From approximately April 2020 through November 2022, the defendants raised approximately $112 million from hundreds of investors through fraudulent offerings in 8 REV portfolio companies, including Pier 1, Dress Barns, Linens and Things, Radio Shack, etc. So the complaint alleges that the defendants sold securities in the form of unsecured notes, promising up to 25% annualized return, as well as equity membership units, because probably an LLC, that's why, with a monthly preferential dividend as high as 2%. I'm assuming that the 2.083% is annualized divided by, but it sounds like this is the monthly preferential dividend. So this is massive. Multiply that by 12 to just give you an idea. That's also about 25% annualized interest rate. So this is massive. Having these kind of like debt and these massive preferential dividend, this is a lot. This is very expensive money for a venture like this. So I'm not sure how they pulled that together or what they were thinking when they were actually looking at the numbers. Obviously, extremely optimistic about what would happen with Radio Shack and Dress Barn and all these things, that they would make a tremendous amount of profit. But obviously, that didn't happen. So this is where if things start to go kind of not in the right direction, starts going down. So according to the complaint from the SEC, Lopez and Mayer made material misstatements in connection with these offerings about the success and profitability of REV's business model and the REV retailer brands, as well as the safety of investors' investments. And this is the problem. If things are not going well, you want to communicate to your investors that things are not going well. The complaint further alleges then that the defendants transferred at least $5.9 million in investor proceeds directly between portfolio companies. So this is, each entity is supposed, Dress Barn is Dress Barn, Radio Shack is Radio Shack, and all of these entities should remain, they have their own bank account, they have their own operating agreement, they have their own investors, all these things. So you shouldn't be transferring funds from one another just like that. You should have, these are two separate people, and then you need to create some kind of promissory note or some kind of agreement between these entities. You can't just be transferring funds between one company to another, just directly between portfolio companies, contrary to the written and oral representation made to investors about the use of proceeds. So now, I'm not sure exactly what these misrepresentations were. You need to explain why you're doing this, and so at least $5.9 million of the returns distributed to investors were in reality Ponzi-like statement funded by other investors. So they raise money from new investors, $6-10 million, whatever, and they take some of that money to pay interest payments and to pay dividend payment as well. So, and that defendants misappropriated approximately $16.1 million in investor funds for Lopez and Mayer personal use. So that's also another big one. Like, if you're gonna take money out, you have to have a reason. So you have, is it a management fee? Is it, what is it exactly? And if it is a management fee, then it needs to be written up in the operating agreement. The investors need to be aware that when they are investing in this company, that there's gonna be $16 million in fees at one point. So you have to be transparent about all these things. That's kind of the situation here. So Tai Lopez and Mayer are going to have to defend themselves against the SEC for this misappropriation of fund and potential Ponzi scheme. So we'll see what happens next. We live in very uncertain times right now, and with so many changes happening every day, you know that these changes can affect your investments and your financial future. That's why it's so important to stay informed, subscribe to this channel, click the like button, and share this video with someone that needs to hear this. Personally, I always keep myself protected by diversifying my money into different asset classes, not just the stock market. I learned my lessons during the dot-com crash. I had millions of dollars that were diversified into the stock market. I had very little that was in real estate. And when the dot-com crash happened, I lost millions of dollars in the stock market. Luckily, I still had a little piece of real estate, and from that, I was able to rebuild my wealth. And that's why today, I keep the majority of my money into real estate. Real estate is a tried and true investment, and real estate has tons of advantages that the stock market just doesn't have. You have appreciation, you have cash flow, you have leverage that you can use over a long period of time, and you have tax advantages that are just not there for the stock market. So I've been investing in real estate across the US and Canada for the last 35 years, and honestly, it has always worked in good times and in bad times. So if you want to protect yourself and start investing in real estate alongside me, don't know how to get started, click the link below for my investor game plan. I'll also be posting updates on this story and other stories that might affect your financial future. So stay tuned and see you next time.